Hello my fellow freedom builders and welcome back to the channel. 2.5 months back I made a video about some rock solid stocks that I thought would do well in the upcoming time. It was in the beginning of March and everything had been a bit choppy and difficult to invest and trade at the current time at the year. And to be honest, lately I've heard pretty much the same from everybody. It is hard to invest right now. Everything is going up, left and right, up and down. And the question is, how have these stocks that I gave you last time, how have they performed? And if they have performed well, it might be time to look at some new stocks with the same kind of quality. Now, what I did last time was that I took a look at my screener. That is the screener I have in Market Timer Special. That is my Danish subscription service. There is this dashboard that we can screen for all sorts of stuff. And I screen for some high Q scores, meaning that it is high quality on a lot of different aspects here. That it should have a high rank of relative strength. Market Timer Special relative strength above 50 here. It should be, the relative strength should be in an uptrend. That is what we can see here. I was looking for some green zone trend, meaning if you have been following my videos, I want the stocks to be in the green zone on the weekly chart. And then I want them to perform in a way that they were above, the price were above the 20, 50 and 200 days moving average. Now, I don't recall how many I came out with last time, 70 or 80. If I do the exact same scan today, I end out with 137 US stocks. But last time I went through them one by one to find the best candidates. So let's start by having a look at the candidates I found to you last time. Now, the first one was JB Hunt here. And if you look at that, the video was made on the 8th of April here. So that is approximately 6 to 7% here up from the last time. I should say that the S&P 500 has gone up 7% since last time. Let me just check here. Yes, just about 7%. So JB Hunt up around 6.5%. That is absolutely decent. Then we had the AO Smith here, also a very good gainer. And remember, this is just putting on the trade and not doing anything at all. And what we see here is a decent, a bit above 9% in gain. So beating the market, not doing anything except finding good quality stocks in a good uptrend, putting a trade on and just let it run. And who knows where this can go. I'll keep an eye on it and I'll make some update video about it. The next one was Cigna. Cigna was also a very good stock here. It has gone up, let's see, a bit more than 11%. Very nice. The next stock I gave you last time was Advanced Auto Parts. And this one was up, and I'm just giving you some approximate numbers here, trying not to exaggerate, but around 11% again. Then we have the Caterpillar that I have in several of my portfolios here. That one is up around, let's see, 6-7%. And the last one I gave you the last time was Hartford Financial Services. And that one has been a kind of a winner here with approximately 20-21%. Now looking at this all together, that gives us approximately on average around 11% for these 6 stocks if we had just split our money between them and done nothing else. And I should say here, I'm not counting for dividends and everything, but we are just buying and holding and not trying to time the market. I just took these stocks the day I made the last video. So 11% compared to the S&P 500 7%, and that in a time where I can hear a lot of people complaining that it is tough to invest. Now let's look at the next stocks that I have found for you, because I have found 7 new candidates and I'll just go quickly through them, both on the chart and on some fundamentals. Now, What I did, just as I showed you before, USA stocks here, a decent quality, a good relative strength compared to the rest of that universe of stocks I'm looking at. The trend should be upwards in the relative strength. It should be in a green zone, and it should be above its 3 moving average. As I say, I get 137 stocks here. The smart thing is I can just export this list into TradingView and then just have a look at them there. I've also exported them or made a little portfolio in here in Stockopedia. As you know, Stockopedia is my favorite tool for all of these digging out all of these fundamental stuff here. And as you can see, we have the 7 stocks here. We have the stock rank, which is actually decent. They're not green, all of them, but from 63 and upwards, absolutely impressive. Quality rank, the quality of their earnings, also very good. Now, value rank, I wouldn't expect that to be fantastically high because I'm not going for value. I'm going for good quality stocks in an uptrend, but not necessarily what would be called value. But these are actually at a decent value. There are some at 28 or 30 or 46 here, but many of them are above 50. That's great. And the growth rank is absolutely great too. The PEG ratio, if you look at them, I know this number can vary a bit because different platforms calculate them different ways. But the PEG ratio I like to be below 2, and these are below 2, all of them. So that is great. Let's have a look at them one by one very quickly. The first one is ABBV. Now, ABBV is in the healthcare. And if you remember the other day, I made a video about sectors. And the funny thing here is that many of the good stocks that I have found here are matching the sector rotation you could imagine would be the sectors that would be the winner. That is healthcare, it is consumer defensive, and it is utilities. That is the ones I was talking about the other day. So ABBV here, we have it in a green zone. It is in a very nice uptrend, and again, some people would say, yeah, it has been going up for too long, but that's not really what we care about. We care about the good uptrend. The RSI here should be decent, the volume should be good, and ABBV, absolutely a very good stock. Looking at it in here in Stockopedia, we can see here that it has some great PEG ratio. The PE ratio is not crazy high. We can see that the trend in normalized earnings per share is good. We can see that the free cash flow development is very good. That's some of the things I'm looking at. And then, of course, I'm looking at the interest coverage. As you know, I expect the interest to go up. And this 4.65, how many times it can pay its interest expenses by its earnings per share, this is in the low end, I would say. But again, let's see where the interest goes. And yeah, I think this is the lowest of the 7 candidates today. So back to the charts here. ABBV was the first of them. Then we have ALXN Pharmaceuticals, also one that have gone completely crazy in price. And again, since I'm a trend follower, I don't mind that it has gone up 80% since last autumn here. Doesn't care. It is an uptrend right now. I do like it. The RSI is looking good. The volume is looking good. It's in a green zone. And looking back here at our portfolio, we have ALXN Pharmaceuticals here. Let's just have a look. 0.6 in PEG ratio, very nice. We have the earnings per share normalized going up just like we want. You can see the blue bars out there. We have the free cash flow. It has been a bit chubby, but going up now, showing some very good results. We can see the interest coverage is 9.08. That is a lot better, twice as good as the ABBV just a second ago. So absolutely, ALXN Pharmaceuticals, a very nice stock to be looking at. Okay, number 3. We have Arista Network, and this is actually the only tech stock that is in here. And if you remember from the sector video, tech stocks are the ones that I would suspect, if the sector theory holds water, I would suspect the tech not necessarily to completely crash, but at least do a bit worse than some of the other sectors. That doesn't mean we cannot buy a good tech stock, an Arista Network here, absolutely in a good uptrend, a good green zone here. And look at it here. Sorry. 1.8 in PEG ratio, that is decent. Earnings per share going up nicely as we want to. Free cash flow, a bit choppy, but going in the right direction. And we have the interest coverage of 100, meaning that there's absolutely no development in the interest on the short term, at least, that could really rattle Arista Networks. So that is one thing I like, and many of you have asked me why I'm so critical towards the tech sector, and I'm actually not. It is mainly the small tech companies that are overly leveraged with a lot of debt. These are the stocks I am worried about in the upcoming times. Okay, back to the chart here. Number 4 is Henry Schein. Henry Schein, again in the green zone. It is a healthcare stock. It's in a very good uptrend. You can see it has broken the former top here. It's bouncing nicely off the 20 SMA. The volume is showing some good spikes here as when the price is going up. Of course, this was the earnings. So Henry Schein on the chart looking decent, absolutely. And over here, let's have a look at it. 1.2 in PEG ratio. That's very nice. We have the earnings per share here is not developing in a straight line upwards. And yeah, well, it is still decent, and it is not my favorite chart here. You can see it as well with the free cash flow. But it is at least on the same level here. It's just going straight forward here. And we have the interest coverage at around 25. So also decent. Very good. Nothing much else to say to Henry Schein here. Of course, I can do an in-depth analysis on all of them, but I'll leave that to you to do your own research. You need a bit to do with your time as well. Then we have Equia here. Again, a healthcare stock, very good uptrend, very good green zone here. I actually started to get some decent buy signals at around here in October last year, around 160.70. Has gone up a lot since then. Then it has made what I call a sideways retracement here, meaning that the 20 SMA can just catch up. And right now it seems like it is bouncing upwards from here. The RSI is looking good. The unbalanced volume is decent. And looking at it here, we have Equia and 83 in stock rank. We have the PEG ratio at 0.5. We have a very good trend here with some very good growth in the earnings per share. We have the free cash flow going up just like we want to. Oh yeah, we had one that was worse actually than ABBV, and that is here with an interest coverage of only just above 2. Now, the reason why I gave you this one as well, even though this is terribly low and not something I would normally accept in an environment with a potential interest hike. The reason why I am accepting the 2.09 here is what we see here, which is that the earnings per share is the estimates are that will go up by a factor of 3, 4, 5 ish here, and that means that the interest coverage next year, even if the interest should go up, would still be decent because they will be earning a lot of money. You can decide for yourself if you think the interest coverage is too low. It has a very good Petrosky score of 8, and the 21 analysts here are absolutely saying a strong buy. So Equia, I don't mind it too much. If it starts to drop, we can always sell it. That is how the trend following strategy works if you have been following my channel here. All right, couple of stocks left. We have the LKQ Corporation here. And that is actually in a sector that is mentioned as consumer cyclical, meaning that it was actually not really the thing we should go for right now if we believe completely in the sector theory. However, these are in the auto parts, replacement auto parts. Right now, if you have been following the market for used cars in the United States, the prices have exploded. It's gone completely crazy. The inflation rate is so high in used cars. And that is why I actually took this as well, even though it was not in a completely correct sector, if you could say so. And the reason is that I believe that a lot of people would prefer to repair their old car instead of shifting it into another used car. So the LKQ Corporation here, again, if it starts to break down and break the trend, we just sell it. But everything on the technical side here looks absolutely perfect. And if you look at it in here, you can see a stock rank at 99, PEG ratio at 0.8. We have the earnings per share normalized here, fantastic development also in 21 and 22 in the estimates. The free cash flow here also exploding upwards. When we're looking at the interest coverage, it's almost 11. That is decent, and we know that the earnings are estimated to go up as well. So that will be okay, even if the interest goes up a bit. All right, let's have a look at the last candidate of the 7. And here we're looking at Pentair, and Pentair is also in a very good uptrend, and as you can see here, as a trend follower, this is just fantastic to look at, starting down here around the 40 with the good buy signal, and then just going upwards and upwards, getting close to what, 70-80% right now. I don't mind buying it here. It is trending nicely. It is bouncing on the 20 SMA. It's looking good on the indicators. And looking at it in here, we can see they are actually under the industrials. And it's not that we can't buy any industrials right now. They are doing great. But if we are kind of rotating out into the next sectors, then industrials might be a bit slower moving in the coming time. Now, what we should know about Pentair when we're looking at it here, the company is engaged in water quality systems business and flow and filtration solution businesses. Now, this is actually, it is an industrial under the sector, but they are providing services to water purification, water quality, and that is actually under the utilities sector. And the utilities sector is one of the sectors I expect to be the next to grow. So why not have an industrial that is providing services and selling products to the utility sectors if we can't find one in the utility sector itself. Stock rank at 87, PEG ratio of 1.2, very nice. Earnings per share going up nicely. Free cash flow a bit jumpy, but we have the for the 2020. Let's just have a look at here. 2020 going up, and you can see the TTM, the trailing 12 month, also going up. We don't have any estimates right now for 21 and 22. Many of them, by the way, are paying out dividends, and what I'm looking for here is dividend coverage of at least 2, meaning that they can easily pay out their dividends and still have money left to do some development in the business. Interest coverage at just above 23. That is very nice here. The analysts are a bit somewhere between hold and buy, but I'm not looking too much at that. So that was the last of the 7 candidates. So if you're looking into some of these, we're looking at ABBV, we're looking at ALXN Pharmaceuticals, Arista Networks, Henry Schein, Equia, LKQ Corporation, and Pentair. As you could see, there was a lot of other candidates, 137 candidates here. And if you're one of my subscribers in Denmark, you have access to this tool. And you can, of course, put your own filters in here, your own criteria. So I just took one of mine and went through the 137 stocks for you, so you didn't have to. That's all for now. I hope this was inspirational, and I will get back in a couple of months maybe to these stocks again, and also the one from the first time. Maybe if some of them starts to give sell signals, I'll tell you why I would have sold them. That's all for now. Take care of yourself and your money out there, and I'll talk to you again shortly. Bye.